I want to get your take on what's gone on with Bitcoin. It seems like all of the right things are happening for the Bitcoin story in terms of the legislative sort of arena, the regulatory environment seems to be good for Bitcoin. The investment case is good for Bitcoin in terms of institutional investors coming in. There are all sorts of products tied to Bitcoin. Why is it down so much?
Well, I think the markets generally have been off based on geopolitical uncertainty and news flow about tariffs and things like that. So Bitcoin has followed that. I think in short term, Bitcoin follows along. In the long term, it's decorrelated, basically. So I think it's just a longer term view.
What do you think the role is of the Bitcoin treasury companies and sort of the burgeoning area in terms of how many have come onto the market recently and the decline in Bitcoin prices? Is there any correlation? It seems like that element of the story is a little bit different in terms of the decline that we're seeing this time around.
No, I think they are generally supportive for the Bitcoin price because for the most part they try to hold, buy and accumulate as MicroStrategy started some years ago now. And so they're effectively taking Bitcoin off the market. They're generally able to do that in more bullish environments faster. But even today they're buying Bitcoin.
But even with all these treasury companies buying Bitcoin, you have these holders that should theoretically provide much more of a floor. Do you think that it does provide more of a floor for Bitcoin as we see prices decline?
I think Bitcoin tends to be a little weak to the downside because many of the retail investors end up being all in, and so they don't have a lot of capital to buy Bitcoin. Whereas if you look at public company stocks or big mutual funds looking at analyst reports, if they see the price of something come down, they might sell some Microsoft and buy some Tesla if they think Tesla's cheap at a given level. With Bitcoin, most of the investors are all in, so they don't have that ability to sell something else to reallocate. With more institutional investors coming in, I think you see more of that reallocation between other asset classes, but it also can bring with it some correlation short term.
Mm-hmm. There's also the new element of being able to bet on the direction of Bitcoin in many different ways. You could bet on the direction of Bitcoin in every 5 minutes. And I'm wondering if that, you think, plays a role in terms of sapping away that retail, even the incremental retail trade, away from actual Bitcoin to other sort of devices and instruments.
There has been some discussion about so-called paper Bitcoin in derivatives, but I think it's mostly arbitraged out so that there's very little effects from paper in Bitcoin. Like in gold, there's a lot of synthetic gold. In Bitcoin, it's either physical or there's side contracts, and there's very few people that are long-term short Bitcoin. So most of the Bitcoin that's margin long in like CME futures, there are people doing basis trades who are buying physical Bitcoin to hedge. So I think it mostly offsets actually